Hi everybody, and welcome back to Fang Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, it's Friday the 13th, and it looks as if there's going to be a lucky day for the active traders in the crowd. 5 of the Fangs had fallen to structural breakpoints and are rebounding today, with all the rest bouncing back beautifully anyway. I'm not attaching that much importance to this event, however, as the NASDAQ 100 and the Standard & Poor's 500 are in SVA downtrends and have some distance to go before they render us a solid trading level. However, I will point out that the Canadian market stopped precisely at its high conservation price. That's 1.5 times book value. And I would not discount its value in bringing us to at least a trading opportunity in North America. Today, I'm going to focus on earnings and fair market values because we are getting some disquieting changes in earnings trend that might well portend, no, let me change that, are highly likely to portend some unhappy changes in the price of 2 or 3 of the Fangs. I'm also going to show you a couple of examples of what I think of as the jaws of death, and why I personally would be concerned about the price outlook for many of the NASDAQ 100 stocks right now. I should mention that we are actively considering doing a special free webinar for Fang Friday viewers in early June, which we will call Using SVA to Survive and Flourish in a Bear Market. Registration opens next week, so stay tuned. However, right now, before we take a look at the Fangs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon and take a look at this chart. And what do you see? Look at the trend of the fair market value. All of a sudden, remember last week, it had sort of sloughed off a little bit, but we are now in a sharp downtrend. This almost seems to indicate that the analysts are changing their mind about online e-commerce now that things are opening up again. And if this is the case and if this trend holds, I would watch the bubble price very, very carefully. Alphabet, well, it came right down to its mid-super growth price. That's 5.5 times book value. Went a little bit below, but today it's bounced back beautifully. In fact, it's up 4%, I think. But again, look at the trend here of the fair market value. It's kind of rolling over a little bit. And why is this a possible problem? Well, here is the answer. Remember, we looked at this last week, and I showed you the long-term trend here for years and years and years. Okay, if I look at the ROE, the return on equity of Alphabet, it was a nice steady about 16-17%. And but recently there has been a huge jump, I think, because of the COVID. But here's the question: like Amazon, is this starting to roll over too? Because if so, and if the fair market value then pulls back to its long-term trend, then there could be some fair downside risk in the stock. In fact, it would be probably down to its super growth price. So we will have to keep that very much in mind and watch the earnings trends very carefully. Apple has fallen to its HB5, which is 24 times earnings, 26 times earnings, excuse me. It's bouncing here today. I have nothing much else to say about this, but I will be watching at the HB5 to see whether that is able to hold or not. Netflix, well, Netflix is just one massive collapse, eh? And as a matter of fact, not only has it collapsed, but look at the earnings trend, and the fair market value trend is moving down now. It does have a little bit of potential now for the first time in a very, very long time. From the time it was $600, $700 down to here. Finally, we have something. However, the earnings trend is not all that good. And by the way, when I look at Disney, Disney has broken support. So I am rather concerned about whether Netflix is able to hold at its super growth price, which, remember, I had told you some while ago was its long-term bottom. Long-term. NVIDIA had a lovely bounce today of, I think, pretty close to 10%. And again, look at the fair market value trend, moving up continuously and nicely. So, Ross, what's bothering you about NVIDIA? Well, here's what's bothering me about NVIDIA. It's what I call the jaws of death. Here, what we've got is a company which started off a few years ago at its fair market value and has been moving further and further and further and further away from it, and then all of a sudden it's peeling over and heading straight back down again. I would not be surprised if we saw this stock back at its fair market value, which would be its bubble price, or 7.4 times book value. Microsoft simply remains in a kind of a steady downtrend. Had a nice little bounce today, but nothing certainly untoward. But again, you see, if we look at the what I call the jaws of death, we see the same picture as NVIDIA. Okay, starting out at its fair market value, in fact, even starting out below its fair market value. So it actually represented good upside potential here, but it's gradually pulled further and further and further and further away from its fair market value, and now it looks as if it's heading straight back down to it. By the way, looking through the NASDAQ 100 stocks, there are so many stocks that look like this. And I don't think that their downside risk is over as of yet. Meta had a perfect bottom right here at its super growth price. Of course, you can't see it now because we got a new balance sheet and therefore pulled the structural prices down below. But we had a perfect bounce. How far did it go? Well, it went right back up to its fair market value. And by the way, let me tell you that both structural prices and fair market values tend to be resistance points for stocks, and certainly that's been the case with Meta. Now, the problem with Meta, we've got this downtrend in its earnings, and the question therefore is the super growth price going to hold? It did initially for a lovely bounce, but is it going to hold longer term? I don't know. Finally, Tesla also came right smack down to its HB4 and has had a 7% bounce as of today. The only thing that concerns me about Tesla, or one of the things that concerns me about Tesla, is the fact that its fair market value is some 70% below the current price. Now, when you look at the earnings at the fair market value, we see a sort of an uptick, so that is a positive and has brought about the bounce. But I remain very, very uncertain because the values are so essentially poor for this stock. Now, in summary, there are two major items to underline today: Amazon and Alphabet. Amazon's earnings forecast and fair market value has abruptly taken a sharp nosedive. If my sensors were not already on high alert for a break below the bubble price, that's 7.4 times book, it certainly is now. The key issue here is that the bubble price is highly significant from a mathematical point of view. If we experience a break here, I need to alert you to the historical truth that this kind of event, okay, has always called for a decline to the next major breakpoint, and that's its super growth price, not its minor breakpoints, mid super growth and low super growth. It's major, it's super growth, which is 3.5 times book. That's almost dead on a 50% decline. I have to observe that in all of our records of the valuation history of this company, this has never occurred before. it may well be that the wrong sort of history is about to be made. Alphabet was feebly trying to break over and hold at its mid-super growth price. That's 5.5 times book. And has been holding very nicely today. When we looked at the possibilities for the stock last week, I did observe that the earnings and ROE had climbed to an unusual level and had carried the share valuation up to an unusually high level as well. If this is now fading, the downside risk could be fairly severe. The stock must hold at its mid-super growth price, or there will be some distance to go before these shares can stabilize. But all I can say about Apple is that if the HP5 26 times book fails to hold, I'd expect lower prices here. But so far, so good. But keep an eye out. Netflix may bottom at its usual very long-term low, its super growth price. But I think the story has been told, and it's over. I cannot justify any reasoning that allows me to tell you with a straight face to buy at the super growth price and hold for the longer term. Maybe it will, as it has before, but I would watch that level for a potential break sometime in the future. Now, NVIDIA has reached support for the moment. But when I look at the other semiconductor companies, they're almost all looking feeble. They've almost all broken support. This is a cyclical company, and the cycle is mature this time around. Of more concern, however, is the potential collapse of the crypto market, which I expect, by the way. And following Luna yesterday, which went to zero, although I have to add, of course, in time. Microsoft is a wonderful company, but it's had its day in the sun for this market cycle. As you saw, our sell has not been rescinded. The shares are far from support, and I would be careful. Now, I don't know what to say about Meta or Facebook. It's very cheap compared to the other FANGs. But the earnings trend is heading lower right now. The super growth price, 3.5 times book, must hold. But I have my doubts. Finally, I have to admit that I'm sorry that I ever started to cover Tesla. I did it because the stock reached the $1 trillion threshold and joined some of the FANGs in this very rarefied atmosphere, so I felt that I should. Musk is a promoter par excellence. He can be a tout in my view, and personally, I don't trust him for a second. We can play this stock technically, which is all I can do, but the downside risks are enormous, minus 70% to its fair market value, and electric cars are becoming a dime a dozen. Let me know what you think, or if you even care about the stock, and I will act accordingly. Since we started Fang Friday, events have clearly shown that there are 3 ways that we can earn our keep with our SBA market service. The first is to help you to find stocks to buy. Second, as you saw with Netflix, I showed you how you can avoid the kinds of big losses that the market can inflict on your portfolio. Third, of course, is to get you into or out of the stock market itself. Now, if you'd like to join our investing community and become a client of ours, go to www.strategicanalysis.ca/pricing and get started right away. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you all next Friday.